Good morning to everybody. First of all, I'd like to excuse me for my late appearance today. It was due to technical reasons. Unfortunately, internet connection is not so fast and so reliable in Russia, but like everywhere. Okay, so regarding today's analysis, the picture is next. The euro is still supported and still kind of buy on the dips. That's why we are still expecting a larger correction lower, closer to the lows, to the highs of 2017, which were broken at the start of this year. Yes. So we prefer to wait for a larger pullback and ready to buy the currency and the shooting of 120. Initial target is 123.20. Let's speak a little bit about today's market behavior. The dollar is still weak, which largely could be explained largely by recent problems with financing of the American government operations. Fortunately, the United States lawmakers should pass the bill providing funding for this kind of operations, but still the situation is unresolved, and that's why the dollar is looking weaker now. Especially we could see that in dollar yen and dollar Swiss, the so-called safe haven currencies. We see that both the yen or Swiss franc are in strong demand at the moment. Regarding the dollar Swiss, if we see the chart, we see that the pair is in strong down move after moving average 200 4-hour line was tested on 10th of January. Now the pair is on a strong bear trend with initial target around the lows of September 2017 at 94.30, and the low was, if you remember, the low was registered at 94.20. That time it formed a kind of double bottom, and fortunately went higher after that, making a high around 10030.40. But now the pay is again weak, which could be explained by recent risk-off behavior in the markets. The dollar yen is the same. Still the pair is trading below former broken support line, now resistance around 112, and while the pair trades below that level, it could test low levels. And from a longer term point of view, we see the kind of really reasonable kind of longer term target is located at the moment around 105.50, the longer term uptrend that started in June 2016. But we are speaking maybe a little bit premature about such kind of lower levels. Still dollar yen is in demand from a longer term point of view because of the difference between monetary policy of the corresponding banks. We see that the Federal Reserve still hiking the rates, but the Bank of Japan still conducting ultra loose monetary policy. Anyway, the first signs of maybe, let's say, so-called normalization of the monetary policy from the part of monetary authorities of Japan when they decided to reduce the buying amount of its Japanese government bonds. We saw the reaction of the market by stronger yen. If this process will continue, for sure the yen will stay in strong demand and will come much lower from local levels. Break today below 110.20, the first reliable support could initially lead the currency lower around 109.50. But we are still expecting a kind of correction to the upside, closer to the 112 level, to sell the currency with initial target around 110.20. Regarding the Australian dollar, which is trading now around 0.8020, it's still we are still long position, but we tightened our stop loss, which is now stop profit, below the short-term ascending trend line. Short-term ascending trend line in Australian dollar, which lies today, we see that around 79.20. That's we decided to put a stop below that level. Today is Friday, it's the closing of the week, and attention of the market is slowly moving to economic data of next week. And here we can point out the most important event will take place in Europe, where the European Central Bank will decide regarding its monetary policy, regarding its interest rates. From this point of view, it will be crucially important how the European policymakers react to the current surge in the euro's price. So we advise some caution with a long positioning in the euro dollar right now, or in the euro crosses. We see already this in the euro yen, in this euro Swiss. Euro Swiss is much lower, not much low, but anyway it's moving some way from the highs of about 118. We see that in the euro Swiss now approaching the first reliable support around 116.80, where we will start to buy the currency, with another support around 116. We see that the moving average 204-hour line was tested at 117.10 during this morning, or the night, during the night, which could be explained by risk-off situation spreading across the markets. Now it's hovering around 117.30. Line is still keeping its bullish kind of orientation. So it's still a buy on dips strategy in this pair. The euro yen is also in the strong uptrend, but also moving slightly away from the highs of 136, from the highs of 136.63.5 registered on 5th of January. And we see that the pair still finding kind of stronger offers above 136. But any kind of pullbacks in the currency closer to the support line around 133, of course, should be bought, and we are waiting for such kind of a retreat in the pair to initiate a new long position. I think that's enough for today. We advise some caution for you today. The market is still very volatile, and take care, because I think that probably during American session we could see some kind of stronger moves, which could be explained by thin liquidity into the markets. We see that regarding economic calendar, today economic calendar is rather scarce. We just have preliminary University of Michigan consumer sentiment and inflation expectations and manufacturing, sales, and foreign securities purchases from Canada. Also, the Federal Open Market Committee member Quarles speaks, and maybe this kind of event should attract a special attention of the market. We advise some caution with over positioning at the moment, and wish you a nice weekend ahead. Bye bye.